Well, Telstra have just reported their FY16 result, and it was actually a very good result. So I think a few people were worried about network issues, potentially being a drag on earnings, but if you look at the headline number from Telstra, it's a really good result. Their reported profit was up very strongly, in fact 36% to $5.8 billion, and the dividend was up 0.5 cent year on year to around 15.5 cents, and that was in line with people's expectations. So the headline number was fantastic, but in fairness, we've got to point out that there was a near $2 billion gain on the divestment of Autohome, which was Telstra's equivalent of carsales.com, which they divested in the half and had flagged. So if you put that aside and look at the underlying business, the profits were down around 3.5% year on year. Driving those changes in profits, you really saw the fixed line business going backwards a little bit as the NBN starts to gain traction and eat away at the earnings there. And the two divisions that did exceptionally well, firstly the mobile division, the largest part of Telstra's business, continues to grow EBITDA there. And then secondly, the international business is the one that did really, really well with over 100% earnings growth year on year. So compositionally, you're seeing a mixed bag from Telstra, but overall things continuing to look pretty solid. The other bit of new information I think really from this result was that Telstra have announced a $1.5 billion buyback, which is really the proceeds from Autohome, and they're going to do an on and an off market buyback. So have a chat to your advisor about that, as there's an opportunity there for shareholders, and we certainly think that's going to help shareholders whether they participate or choose not to participate, because you'll see Telstra's profit spread over a smaller number of shares, so that will accelerate the earnings per share growth for the company. And then the second bit of new information, which may surprise a few people, was that Telstra actually continued to add both mobile and fixed broadband customers. So the result that just came out actually saw Telstra add the fastest number of new fixed broadband customers they have in 5 years. And then the second key point was that they continued to add postpaid mobile customers. In fact, they added 169,000 for the 2 years, for the year just gone, which is the fastest number they've done in the last 2 years. So despite some concerns about mobile network issues and fixed line network issues, I think consumers realise that nothing's bulletproof, and in fact Telstra still has the best network out there. And we think they'll continue to improve on that network. The third bit of new information they provided was really that they're going to increase their CapEx. It was 15% of revenue they were going to spend on CapEx, and they've increased that to 18% per annum over the next 3 years. So they're going to continue to invest in their networks to try and improve the business further still, and we certainly think that will underpin some healthy earnings growth for Telstra. Not huge numbers, but small single-digit earnings growth there, and we continue to believe there's room for that dividend to improve. So we're very happy holders of Telstra.